All right, let's get into that ninth consecutive interest rate hike. This afternoon from the Reserve Bank, interest rates are now at their highest level since 2012. Joining me now, News Corp business commentator and economist Terry McCrann. I don't know, Terry, we're all told and warned, expect the rate increase. But I tell you, if you've got a mortgage, it doesn't make it any easier to help pay your way when it arrives. How do you think the markets have reacted? And are you confident, or do you get the sense that we're now at the end of these increases?
First point, Peter, I have to say no. We'll almost certainly see another 25 points at the next meeting in March. When we talk about 9 rate rises in a row, let's not forget that we started at almost zero. We should never have gone all that way down to zero, but we did. And coming back from that is to get rates to somewhere half sensible. The rate of inflation, Peter, the annual rate of inflation is 8%. So when you talk about a official Reserve Bank rate of 3.35%, it's still very negative in real terms. So it's not having as dramatic an impact on the economy in terms of slowing down those inflationary pressures as would have been the case in previous years. As you say, Peter, only 1 in 3 people actually have a mortgage. 2 in 3 people don't have a mortgage. Half of those are renters, and the other half are savers. So it's sort of, as you say, Peter, it's not working dramatically in terms of impacting on the economy, and that really means that the pain is going to be extended for longer and will go yet higher from this point.
Yeah, okay, we'll just pick up that point. If you've got 1/3 with a mortgage, 1/3 renting, let's say, and about 1/3 with the homes paid off, you're relying on, in terms of to put the brakes on inflation and spending, aside from government spending, and that's really important too because they can spend, you're relying then on 1/3 of Australians to feel so much pain they really pull the horns in. Now, that might be fair and well, but we clearly have a heavy spend going on in other parts of the economy. Yes, I know eventually it'll flow through to renters, but of course, if they're on a fixed term lease, they're not going to feel the adjustment immediately, where the mortgage holder will. Those rates will go up the next time they have to pay out next month. How much pain is the poor old mortgage holder then expected to bear? We know the Supreme Court judge in New South Wales just the other day warned the court, we're really going to have to expect, he said, a significant spike in home foreclosures. Is that where we're headed?
Well, I don't know about a significant spike, Peter, but certainly some increase. And the other point to be made, obviously, is we're not just relying on higher interest rates impacting through mortgage holders in terms of slowing spending, because everybody has been hit by the general inflation impact and everybody's been hit by those higher energy prices. And that's biting dramatically into household budgets at the same time. Now, obviously, if you've got a mortgage as well, you're getting both. You're getting those higher energy costs, those higher inflation, food prices and so on, and your mortgage costs are going up. So it means that rates don't have to go dramatically higher, but they do have to go somewhat higher from here. And it also means, as we've indicated, that you really need the federal government to play its part as well in terms of taking some pressure off spending. It can't rely entirely on, as you point out, Peter, the Reserve Bank try to do it indirectly and only by hitting some people out there.
You know, and I know, when there's pain in the community with voters, in this case mortgage pain, we start to see foreclosures. We obviously are seeing the impacts on small business of energy increases. I think of the guy with the pizza shop. The gas for the pizza oven's gone up, 2-3 times. The cost of the pizza can't go up that much, or he won't have a customer. So if that's where we are, the politics of it will be that the government will have to be seen to be doing something. Andrew Clennell just said, there could be handouts for people on their energy bills. Isn't that counterproductive with the work of the Reserve Bank in trying to get inflation under control?
As Malcolm Fraser said, Peter, life was not meant to be easy, and it's certainly not meant to be easy for the policymakers. But we do need some help coming from the federal government. Yes, as you say, it creates its own realities, which will work to some extent in the other direction. But I personally don't want to see handouts from the federal government. What I want to see from the federal government is sensible policy. And I think we would both agree that the key areas we need sensible policy are on energy and gas prices, gas and electricity prices. If we could get sensible policy on those fronts, where you get reductions in prices, it's not going to happen overnight, obviously, by having more deliberate supply.
Show me a Labor government that doesn't love a handout.
Well, indeed, I can only state what we should be getting. I can't actually say that it will be forthcoming from Canberra.
All right, we'll see, won't we? The budget's not that far away. Terry McCrann, thank you as always.